Hi, this is Elliot Wave Sage. I want to go ahead and do a market update. Like always, none of this is financial advice. Always do what's best for you. Just use this for your education and entertainment purposes only. This market is showing signs that it's ready to reverse, despite what people feel online. It's meeting all the criteria that you typically look for to see a reversal, not necessarily a continuation in trend. The reason I say that is there's so much euphoria out there. There's so many overbought indicators. We're outside the Bollinger Band levels as well. And the defensive sectors are starting to show a lot of bullish divergences. So I do believe this final blow off is going to end very soon. So I look at the SPY like this right now, 3 waves and an A and a B and a C wave. This discount is very unorthodox, but it's a valid count and it matches up where technology is. Because if I thought technology would continue to extend, I would then have a different look and I would bring this up to 452, but I don't think that's going to happen. And I'll show you why. But right now, as you can see, we still have this 4-hour divergence here, where this is the peak on 3. So I still this is still valid in my mind. And then here, as you can see on the shorter time frames, where we're on wave 3 of this 5th wave, and we should pull back in 4 here, and then make one more high to finish the sequence. That's what I'm expecting to see come to fruition, and that's what I'm looking for right now. Now, if this 4-hour divergence gets erased, then it changes the count to a WXY count and an ABC, and then we could extend into these higher areas that I've shown here, and we would change this up a little bit. So something to keep an eye on, but that means we really need follow through in the coming Monday and Tuesday session. If we don't get that, then this is in play. And then the triple Qs, I still have in this WX structure, and then of course here you have A, B, and C, and we're finishing that impulse in C right now, and we should be finishing up wave 5 of C. And if we look at where we are in this, again, like the SPY, you already have divergence showing it's the 5th wave, and this was my sell area for that wave at 57 and may not get there. It looks like it's about to run out of gas. It could already have topped out, but it could still be one more marginal high like that to finish 5. And then that should do it. Now you have to remember tech is outside Bollinger Bands. It's not a sustainable move unless you believe we are in a .com type situation, blow off top for the grand super cycle. Now that's always a possibility. That could always happen. But the reason the .com bubble happened and had that massive blow off top was it was coming out of a major bear market, and it was building on higher highs. Here we haven't made a higher high. We have a blow off top within a bear market, which is typically how connector waves end, with a massive squeeze. And then even despite all the enthusiasm and euphoria and squeeze, the market can't still make a new high, and it can't because it can't match the enthusiasm that existed prior, even though there is still a lot of enthusiasm. So this is kind of where I'm at. So I'm still looking for this reversal, and then the IWM here, I do like it lower now. As you can see, here you have 1, 2, 3, 4, 5, and you have this A, B, and then C here, 4. So I'm going to count this as like on a zigzag right now, something like this. So you can see that, and I like that pattern. Now the other option is it's a WXY pattern, and you could try to force that because of the strong momentum here in this leg where you have 3, a connector, and then another 3, or you could have a 1, 2, 3, 4, and an extended 5th down here. So I'm gonna trade, what the RSI is telling me. So something like this is kind of the look, and this is our A, B, C for the B wave connector, and then we've already started 1, 2, and then 1, and now we're in 2. So 2 could continue higher as long as it stays below 198. And I gave this area as a possible pump target area, which started to take place on Friday. And you could see right now we're going to be right in there. So the Russell's at risk of reversing down. So keep that in mind as you trade. And then the Dow Jones, very ugly pattern. And again, 3 waves down. Now here you see you have no divergence on that peak. Okay, so a lot of people could say, well, that's your W, X, and Y, and you could try to make that case. I don't like that because we didn't get deep enough here on that push lower, and as you can see on the weekly, we have divergence. So I still like this kind of pattern here in X, and then if we at the higher time frame, you could see 3 down. So clearly we're in another W here of some kind, and now we're in an X, and we should be pushing down in Y. And if we look, we're still below this this line here. So as long as the weekly stays below this count is valid, and which also tells me that we could be reversing this move up. So keep that in mind if you're trading, and keep that in mind. So here you have your W, your 3-wave connector down, 3 and 3 for W, and then here it looks like 5. I'm going to put it there, and then A, B, and then your other connector here. So again, looking for another W within an X wave for Y. So if this is Y here, I would be looking for something like this, down, and then a bounce, and then another wave down. Something like that is what I would be looking to see happen. And I do want to see this end. So this Dow pump, I want to see it reverse. This is very important if you're bearish to see this unwind. If you look, we've seen these pumps before get reversed quickly. Here's a pump, it gets reversed all through this correction. So it's definitely possible. Here's another one in reverse. I think the most important thing that I want to see is we need to stay below 34.7 and then that weekly trend line. If we can do that, then this is still in play right now. And so let's see smaller time frames. What can we expect in the Dow? Well, if this is a 3-wave move here, we should see an ABC, and here something like this. And so again, it looks like you have a 1, 2, 3, you need 4 and a 5. Just like I think we said the SPY needs to pull back in a 5 to finish that. Doesn't have to because it's the shorter time frames, but in other words, it could still be a WXY at this time frame. But I do think this is kind of what I'm looking for. again, another pullback. Now, a lot of people are already saying all-time highs. Well, we're not there yet to say all-time highs because it can't make all-time highs across the market to continue the secular bull market without the Dow and the Russell, and they're nowhere to be found in this rally. So we need to see some signs of a reversal in these two indices. And right now we don't have it, even though it was a really nice feeling on Friday. We need, as long as this is below this trend line, the bears still have a chance. As long as we're below that trend line, the Dow could still break bearish. It isn't necessarily a good thing. And so you need to be really careful already, declaring the bull market is over until you get the evidence that the other indices are going to come and support this and the breadth improves. So this is my 11-minute update on the indices, what I think we should see. And again, so I would say going into Monday and Tuesday's session, do we get follow through to raise the 4-hour divergence? If we do, then that opens up more upside in tech and the SPY. And then do we get follow through all in the next couple weeks to break the weekly and the Dow? That's the two questions that need to get answered, which is why I'll sit on the sidelines and let those get answered before I decide to play the indices at the moment. Now, there's other individual stocks out there that are good trades besides the indices, so look for those. The Bitcoin, again, has a lot of different options to it, but when you really look at Bitcoin coming down from this low, you have a 1, 2, and a 3, 4, 5, and again with divergence, so clearly an impulse down, and we're bouncing in that impulse. Okay, we're bouncing in an impulse and in a corrective structure, right? Now we see massive divergence here between this peak and this peak here on the daily, but on the weekly you don't see that. So I still will, basically the way I would look at this is have how can I say that this is still a corrective bounce, and we are not impulsing off the lows. I don't see it that way at the moment. And one explanation for that could be is this where I have this 4-wave may not be completely accurate, because I could put that 3 and 4 and 5 here, and this is probably the better way to do it now, studying it a little bit better, and put that here and like that, and then you can get the divergence erased with the 3-wave reaction, and then this accounts for the impulse off the bottom on the shorter time frame. So that's kind of, I think, what I would go with for now. And again, this will fool a lot of traders because they see the impulse and want to go along. But that's why you got to be really careful right now in Bitcoin and be cautious. Now it is tradable. Here you have 3 waves down and a connector. So if it takes another wave down, I think you can have a great long trade opportunity for a bounce or an invalidation of what I have to new highs, 23,300 to 20,100, stop at 20,000, and that's how I would play this, whatever this is, because it's got a couple options, but I do think I would rather trade it this way. And really, Bitcoin has not been keeping up with this melt up, and I do believe it's because it's going to drop like this, and then I think it has opportunity for some long positions if its structure can hold up, and then that would invalidate this connector, bring us back to the other one where it's an A, B, C, and then it has more options. But I do think this is where Bitcoin is heading at the moment, something like this. Now, Again, this is 3. This could be another connector, and X could continue up to 30,000 again, and then get rejected. So it has options. I'm just waiting for my pitch, right? I always react to an event versus guessing. Here is a guess. Is it going to go up or down? Why trade? Let's wait. If it goes up, fine. I miss a trade. Well, wait. But if it goes down here, well, then I may have a great opportunity, and I'd rather wait and wait for that opportunity. Oil is got pump potential right now, and I do believe you could see this go in an ABC fashion and then come off this low, something like that, up to 88. It could do this, and I'm thinking more and more that I'm more inclined to think that because the connector's so shallow here. This would be too shallow. So again, I'm still looking for, this could probably play out in oil. If this happens, that would support the market a little bit longer. It would be really interesting to see what goes down. If that is the case here, then it's a 1, and then we could still be in 2, and then we could come down at 78, 80. So oil has a lot of noise in it, but I do believe it's going lower. Gold has a pivot now, and if it breaks this pivot low here at 19, then I believe then it's just a zigzag correction down to 1832. Another good long trade. This was a long opportunity, but if we stop out, then I would look for a lower. And silver is the same thing. Long opportunity has been playing out well. If it does go back down and break it, I would be looking for this impulse AB, and then C down to 2040, down to this area, 19. And then natural gas continues to be weak, which we're not surprised to see. Now, if oil pumps, natural gas typically lags, but follows oil typically. If it doesn't, if oil drops, then I believe this structure will continue lower. People have asked me about Boyle, right? And I said, watch for that megaphone pattern. And it looks like we got that pattern completed. Now you need to worry about is this a bottom reversal or a continuation pattern? This could be a reversal pattern, or it can be a bearish continuation. It seems like it's going to be bearish continuation. Be really careful trading Boyle given where NG is, because I just don't think it's going to bottom. If NG is bottom, that means oil is not going to go lower, and I just don't think that's the case at the moment. The 1 year is no one's paying attention to. The 1 and 2 year, and we're continuing to build. I do believe we'll be going much higher in rates, and the 2 years starting to turn up. And then the VIX, everyone's freaking out about the VIX. It looks like we're finally hitting this support area here at 1431. If that breaks, there's really no support down at significance to $8. I would really support the market and be very typical of a wave 3 bottom. As you could see, that's the 2017 push lower. So this would be a sign of acceleration in the indices, but again, the VIX has got massive bullish divergence, so it seems less likely to just drop, but I mean, who knows? And then the dollar index has a lot of different options to it. I do think if I have it labeled right, it should have at least one more swing higher up. And then once it gets to this double top area at 105.9, then we'll need to see where things are trading in terms of metals and commodities here. So metals could still be going lower with this dollar, in an A, B, C for X. The other options is the dollar's already bottomed, and we'll see massive acceleration, and that would be the crash scenario across the market. So that's why, again, the dollar shows mixed messages. This is bullish for the market, what I have here, but not in the, this would be, if the dollar falls, every market's love to go up. But if this is already finished and this is not right, and this is a 1, 2, 1, 2, and then we come out of that, then the market's going to go down quite a bit. So then that's it. So then so for trading wise, commodity stocks, they're not good trades yet that I see. I do think Nike's getting attention on the Fin Twitter community, and it could be done here but I think it's going to need earnings to decide that. I will see where it's trading before earnings, and then I'll decide how I want to play Nike. But it seems like it's going to want to bounce out of this area. Lululemon, everyone was like euphoric over, but it got rejected. It did not break this high, so it could still be just a massive one too. And that would surprise people. I'm looking at Wingstop for a long trade at 185, 179. If I can get that, of course, Crocs, I like to get that down at 78. And then again, just kind of going through these Celsius. Now everyone wants to buy Celsius. No one wanted to buy it when I said to buy it here. But now everyone wants to buy it when you should sell it at 147. And then it should pull back, more than likely fill the gap. And then the staples are way oversold. They are due for a massive bounce, and that tells me that's a correction in the market coming. If we just look at like a simple stock like Pepsi Cola and look at the daily RSI, it's completely reset, the stochastic reset, and then the weekly as well is starting to turn down here. And for this, it's a sharp downturn. And things. So I really look at the staples here as an opportunity, um, but again, it also formed a connector. So like oil, like the gold and silver did, you need to keep that in mind. These shallow connectors, you see how the cycle massive correction in the 45-minute cycle. So if this were to break that pivot, it could take it down to 168. That would be a massive dump. So again, you don't want to fall too much in love. And in fact, this could be an ABC zigzag playing out here, right? Later. So just that's why I'm not in really anything right now. There's so many mixed messages. I'm just waiting for my pitch now. Um, AEHR has been really bullish since the buy alert. So then technology, everyone wants to trade technology. So what about this AI stock? If I was day trading it, I'd be looking for, so if this low breaks, which seems like it's going to, I'd be looking at 23, 20, 15. And like I said, I warned you that they can even make new lows based on the structure. Tesla, again, I think it's going to do one of these flats that I've got here, and then rug pull everyone back down before it comes back up, something like this. I know some people are hoping it's just going to go like straight up like that, and I just don't see that happening. I just don't see that happening. Apple, again, everyone's euphoric Apple, but it has not made a new high. It has a lot of news coming out on these headsets, that VR headsets. Someone said it could be even as much as $3,000-$4,000. No one's going to buy that. I don't think so. But everyone's trying to panic into that trade right now. And then Netflix is a good long trade if the pullback can happen. This looks like three waves. It did break this high, so I'm looking at now, because it's just not pulling back. I'm looking for a flat, and if we pull back in the flat, it would be a really good buy opportunity. AMD is weak, and of course, I think that's going to head lower to 107, 104, and then it has a lot of options if it can hold that. And then NVIDIA looks like it wants to head down and start filling this gap. If semis cannot rally, the technology cannot rally, in my opinion. Google, again, struggling in the sell area. Microsoft added another swing to continue a little higher. And yeah, just everybody's just so all in on tech. So Adobe, I have that at 446, and that should reject it there. Trade Desk hit its sell area and got rejected massively when it tagged that intraday. Again, at 77, reversal. So these are playing out a little bit. let's see, let's look at some of these others. Here you have snow, again, 3, and still in this 4, it has options. Palantir is probably going to start to find difficulty in this area for now, unless 5 extends. It's possible. Yeah, it looks like 5 is going to extend, so I have to relabel this later. And BBAI could be finished at 194. May start to come out of this. You know, just a simple. We'll see. We'll see if that can come out. And then the green stocks. A lot of, again, internet chatter on Enphase. Again, it's just a 2-wave. Should be failing soon. For solar, again, a lot of internet chatter. Again, should just be a 2-wave. Should fail. Go lower. RK is just in a 2-wave. Now that could still push higher to 44. PDD, I don't like China until the Hang Seng trades lower, and that's the dollar higher down into this area. Okay, the KWEB did hit the my buy area, but not here. But as you can see, it tagged it exactly. It had a massive bounce, but I do believe that either it's still in a 2. But I do think it's going to extend deeper in this area soon. And then, of course, NEO should be getting really close. Could it be finished? Finally hit the sell area. It missed our area by a few pennies and then rocketed out of that. So let's see here. Yeah, I mean, technically, this is 5 waves. So this is either 5. This is either 1, 2, and then get something deeper. My guess it's that, not what I showed. My guess it's something like this for 5. I mean, we could try to. This took, let's see, 14 to like a couple weeks. So 23. So it's only been, we need another. So maybe another week or so. They should bottom out. And keep an eye now, could it still be in 4? It would change the label, and then this would become a 1, 2. And so we'll see how this plays out in NEO. I do think now if the Hang Seng had been lower, if the Hang Seng would have been down here, it would have been a different story. I think when the Hang Seng trades down here, you need to be not as bearish across the market because I think that would tell me the dollar would be ready to have a lot of weakness coming in. But here is too soon. But it could still bounce in something like this, where you finish W and get a bigger bounce, and then get this later. So that could happen. It may not. I may not be like this, right? It may not be like that. So we'll see. For now, let's leave it labeled like this for now. All right, so I saw the video I've got today. I would say for next week, I would be looking for still continued, top-in, like a top-in pattern, like I've got here to finish this out, and then a pullback. And then the question is, what kind of pullback are we going to see? Are we going to see an epic pullback or the start of one? And then going into the Fed meeting and CPI, we get the absolute, like we get decimated into that news. And of course, the Treasury is going to be sucking liquidity out of the market. So again, I'd be really careful just FOMOing in, but I would just, wait your pitch. If I played baseball, you don't have to swing at every pitch. You can wait and get the one you want, the setup you're looking for, and then you can take your swing There's a lot of people just taking swings and guessing and getting lucky, and they're very happy and euphoric about being lucky, but they don't understand how much risk they're taking by taking that swing. But one day, they'll lose everything, or they'll lose their trade, because the market is, if you don't have a system and you're just playing your gut and your feel, and it's like, oh, I feel like the market should go higher. One day it will, until it doesn't. And I do believe the way this move will really be introduced to the masses is going to be a limit down morning, where you can't get out of your positions. The market maybe is down 7-8% on open. Individual stocks down 25-30%, well below your stop loss levels. And if you had calls, you pretty much will lose all your money and all your calls. That's how it's going to probably go down. And so anyone who's not realizing their gains, or they're letting their profits ride, probably will end up losing them all. If you have been lucky on this move up, on this pump up, I would just take take profit, take it off the table, because it's not your money until you claim your winnings. It's still the house's money. And I do believe the house always wins in the end. And I do believe, this move is going to come to an end, and it will be a really, I think, shocking end when it happens, and a lot of people will be burned by it. And then they'll want to buy the dip again, and then they'll lose more, even more, as you go down into these lower levels. And then they finally will capitulate, and they'll either not have any money left, or they will never refuse to buy the market. One of the things I also said is this has been the most exciting first wave out of the bull market that I've ever seen since I've been trading, but most out of the bear market, because normally out of bear markets, the first wave out is full of doubt, and people are so worried about another crash, but nobody's worried about another crash, about this happening. In fact, if I go back to 2009 lows in 2010, and even into 2011, people were so afraid to buy. Everyone was still saying we would go back to new lows, but now no one is saying that. That's not the psychology of what you need to come out of a bear market. That's not the mentality of doubt. Now, the doubt we need is where nobody wants to buy. And if you remember, we didn't come out of the bear market in any bear market, in any cycle, in a parabolic move off of wave one. And some people are like, well, this is 1987. Well, 1987 was almost 6 or 5 years at the end of the last bear market. So we're not even a year out of the bear market. So, I mean, if you really go back to history and go, okay, the first year out of the bear market doesn't tend to go parabolic, and those actually tend to be connectors more times than not. So if you go back again, out of a bear market, if we go back to like 2009 here, we really go back and look, coming out of this bear market, as you can see, we came up and we had this pullback and this massive sideways action here. This is typically what you see in a lot of the sentiment in this time period while we were trading. And if you see these other pullbacks, you got these other mini crashes here. A lot of that sentiment, most people were so convinced the market would never recover again. That's what you need for a bull market, a secular bull that continue here. And here's another one coming out of the bear market. You come up and then you crash back down. We didn't really do that this time. You don't go just parabolic typically. And let's go back to now. Everyone's like, oh, it's like the 80s again. And let's see what happened in the 80s. Let's see. So if we go back to the 80s here, in this bear market here, let's go back here to the 1980s. So as you can see here, we had almost a 20-year sideways move, and then you come out, and then of course you drop. So this is kind of a straight vertical reaction out of 1982, and then here you had 1980. My guess is this is probably the biggest analogy to where we are. If we're in this wave, we would come back down because we haven't seen the recession from the rate hikes yet. Here in the 70s, the same thing. You had these nice, healthy rallies and bounces. Here we go, 70s right here, only to drop. So I do think this type of price action would be is more what we're going to probably see going forward than anything else. And then there's also some people talking like, oh, we're in 1987. And there was one thing that was interesting, that someone was showing a fractal for 1987. And in fact, a lot of people were saying that we should be really close to the end of that fractal. And I'm sure people in 1987 felt the same way. As you can see, you had an unorthodox bottom right here, right? You had a lower low. Here you had a 1, 2, 3, 4, 5 wave bottom. Here, that would have been a good bottom here. And what's really interesting, just like the Dow, you end up with momentum, but you didn't go deep, deep enough. Let's look at the weekly on that and see what that weekly looks like on 1987's fractal. Just kind of see how that looked here. Right away, yeah, so you could have been really fooled to think that was the bottom. And again, this is the Dow. It's almost the same look the Dow has today, where it has no divergence on the daily, right? But it didn't go deep enough. It didn't really go deep enough to really have the fib level hit that I would have expected if I was day trading back in 1987. Here, I would have been just as cautious as I am today, given it here. Now, you come up and you came up and pretty euphoric, and then it just everything fell out. And of course, there's all these good reasons why that happened. But as you can see, where is that fib at? And you can see we're just right before the 236 extension on that connector there. And so that's just something to think about. Could something like this happen, or here close to the 618? So if we go back now, let's go to what it looks like today, and so let's take a look at where we're at today on this. So here we are again. Here we made that lower low. Almost looks like the same thing, and then we kind of rode back up, and now it's just taken a little more time. But I do believe we're at risk of something similar, another epic meltdown to come out of that. So here, let's take a look at what we have here. So let's look at some of the fib levels real quick and see how this looks. So if we were going back like we did before, so there's the 618. So again, it was able to poke over and got, it's kind of struggling there. It's back, and I think we're right at the 618 again levels. So it tends to struggle there. We'll see if that's the case. And then let's look at the other side of it. Could it go higher? So we never got to the 236 extension here at 35,539. So that would be the next area if we were to go higher to keep a lookout for to continue the 87 analogy. But it does seem like it looks very similar, right? Where you have this first part of this correction looks very similar to 1987, where you had a bounce and then a lower low, which erased divergence, and then you come ratcheting back up, and then now you struggle. And as you struggle, eventually it gives way to an epic meltdown, and this meltdown could drop us all the way back down to 22,000 and perhaps even lower to the 18,600. So it does seem like it has that kind of feel, 1987 feel at the moment. This fractal, I do think it does. So just something that'll be interesting to keep an eye on. And if we look back on history and this does crash, like I have here, that would be the clue. This setup would be the clue. But when is it going to happen? Is anyone's guess. All right, guys, that's all I've got.